Hey guys, how we doing? So Dan from Trading with Dan here. This is our Bitcoin evening wrap up. So we will go over to those charts. Yes, so straight over to the 4 hour. So yeah, as you can see, we've got a little bit of action going on here. Just there's nothing to see here, guys. This is just this is how Bitcoin moves. Just a $600 wick. So yeah, $600 from top to bottom anyway. But yeah, but the good thing is though, well, we were starting to make moves up anyway before this, before we started to get this action, before the Fed came out and, well, pumped and dumped a lot of markets. But yeah, so the good thing about this is that obviously you can see we are well above this this support zone now. That has actually, I think I've moved it. Oh no, I haven't. Has it been moved? Yeah, we're basically above this support zone now, which is good. Yeah, sorry, sometimes I have my drawing tools unlocked and then I move stuff and then it moves things on my screen, but no, it hasn't moved it. But yeah, anyway, right, so we're well above this support line now, making a move for the top. I know obviously we had the wick down, but we were brought back up. I know we had the wick above, but we were sold back down. But obviously, remember, we haven't had a lot of price action here, so we're a lot more likely to get sold down from here. So that is less bearish to me than how bullish it is getting bought up again from down here pretty quickly and basically back up to near 9,900. So I feel we're on the cusp. I think the market is making its mind up as to whether it is going to dip its toe in that sustaining over 10k area, which I think it's going to. Again, with any not hidden orders, any placed orders, resting orders that we've had from after this recent move up that cleared them out, they've been sold again. So we've got more of a clear path upwards now, which is obviously good if you want to go upwards. So yeah, I mean it is looking good, guys. I mean we can. I don't feel like we're just going to hang around just sub 10k. It's quite a big psychological level, so I think we will just if we're going to take it out, if we're going to get there, we're going to take it out and get into this zone. If we don't do that, then we are gonna come down. And I think given all these tries above here, if we did come down again to around the 9,400, then I think we would potentially lose that area. I would have to guess that's what would happen. But yeah, but then we could easily get picked up by this support horizontal on the bottom of the trend line, and then if that does happen, we will basically have a picture perfect ascending triangle, and that will definitely calm the bulls nerves that are a bit worried about dipping their toe in that buying above 10k zone. And also what it would mean is that by the time we traded there, we wouldn't really have to worry so much about this weekly 9, because I mean it would be a couple of weeks, wouldn't it? So it would be maybe come down a bit and then back up, and then we're all good to go again. By the moment there, we're putting in as a green 1 on the weekly, so that's obviously good. I mean, just look at how good it will look if we do close this week above 10k. Obviously, I know it's only Wednesday, halfway through the week, halfway through the working week anyway. Not obviously halfway through this this chart week, because it's 4 days and 4 hours to go. But yeah, generally speaking, as you know, I always say this, that at the moment that we are looking bullish, because we are looking bullish until basically we've proven that we aren't anymore. Until we actually start losing some of these support levels. I mean, this been the most notable one now that we have going on. This basically 9,000, we call it 9,500 to 9,400. This $100 range, that I think is our biggest support. So if we lose that, then yeah, I think if we do lose this, then that will, for me, confirm all this as a local top, and then we'll be looking at some more sustained downside. But yeah, that's not what I think is the likeliest scenario. Let's look at those 12-hour Stokes, how good they're looking. Yeah, 12-hour Stokes not looking bad. Looking like they may curl over, may get rejected by this this trend line that we've had in for a while now. We did get through it before, brought it back down. What we don't want is to test this and then come back down again. That would pretty much seal the deal so far as hoping for an ascending triangle, obviously coming down and hoping for an ascending triangle. Obviously we don't have to, we could keep coming down, but yeah, that's a 12-hour Stokes. And the daily Stokes, still not really making a move. I mean, we haven't had a lot of volatility. I know we've got the up and down moves, but then ultimately we end up in roughly the same place. So yeah, it's definitely a case of we've got to do something relatively soon. I know we've just had this quite a big bit of volatility, so maybe we're just going to expect some sideways trading again for the rest of the day, or maybe tomorrow as well, before we then start to really make a move. Obviously, you know, we get these big moves and we like to just have a period of consolidation. But yeah, I mean, really the target, the eyes on the price, above 10k, and then I think that triggers just higher prices and the whole cascade of events that you guys know we've been talking about. So yeah, the Fed has been very dovish, saying that they're not even thinking about raising rates. So basically, rates are never going to get raised again, and they're going to keep printing. There is some problems regarding Fed liquidity though. I mean, it's not that complex, but you kind of have to look into how much liquidity is being sucked up by the Treasury, basically with its issuances of debt that the government basically needs, and then how much liquidity the Fed is pumping into the markets, because that is now at a deficit now. The Treasury is actually requiring more liquidity than the Fed is actually pumping out. So whilst the Fed is still pumping out a lot of money, liquidity could actually start to go, the actual liquidity in the system could actually start to go down now. That's something that I don't think too many people are looking at and anticipating. Stock markets look like they've maybe played a bit of a buy the rumor, sell the fact, and then obviously if you accept the fact that stock markets are liquidity driven, then you probably then have to accept the fact if there's diminishing liquidity, because obviously it's a relative to how much has been soaked up by the actual federal government, how much has been soaked up by the Treasury, with basically what they need to spend. And obviously they're going to be doing more and more spending now, obviously going forwards. So the Fed's pretty much done its bazooka, so now it's tailing off. So I do think there may be problems in the markets going forwards, that I don't think a lot of people are aware of. It's not going to be the greatest thing for lots of assets, really. In fact, any assets really, because what we could end up seeing obviously is stock prices starting to come down. And I know you might think, oh well, that'd be great for gold and precious metals and maybe Bitcoin if you put that in the same sort of category, but it's going to increase. It's going to basically it's going to mean the yields on Treasury bonds are going to go up, which basically is higher inflation, higher real yields, and that's what gold is basically trades in relation to real yields. So if real yields go up, then that means the gold price is going to go down. So yeah, it's not great for precious metals. I mean, we could have a difficult time coming, unless basically the Fed starts printing. But the problem the Fed has got is that at the moment the market consensus is that QE is to support markets, support asset prices. But the moment people start to realise and the penny drops that the Fed printing is actually just to support government spending and just to buy treasuries that they're issuing to fund whatever programs the government's doing. Once the penny drops that is what all the why the Fed is doing QE and what the QE is for, then obviously that's going to basically kill the dollar. We are starting to see moves in the dollar as it is. We were starting to see moves up in the treasuries, although they've actually started. Obviously, they're coming down again. The yields are, but that'll be when the penny will drop for the market, if that's going to happen. Basically when the market cannot deny its complete debt monetization, asset prices can't go up because of increased Fed liquidity, if that Fed liquidity is purely just debt monetization and that money's just been ploughed into the economy in very centrally planned, inefficient ways, that will obviously spark a lot of inflation, because I mean it's just because the dollar will be weakening, because the dollar will basically just be seen as confetti. Once you get an inflation, that will increase yields again. That will increase yields, because obviously inflation is basically kills bond prices, doesn't it? I mean, obviously if the inflation rate is high, it's is implicit in a bond price, the inflation rate. So inflation goes up, then bonds have to basically, the actual value of the bond has to go down, its yield has to go up. So that means interest rates go up. That means everything's bad, because that is the one thing that we can't have, is interest rates going up. But that's obviously why the Fed is looking at basically pinning the yield curve controls. But I mean, he's done that in the past before. I just don't understand how how it's like a long-term policy that they can really affect. But yeah, so so I think we're at a turning point now, to be honest. We've got to the point where everybody thinks buying stocks is so easy, and they can only go up, and that is the exact point that stock markets start to come down. That is the exact point when everybody thinks this is great, it's easy, you can't do anything wrong, and the bears have capitulated, and it feels like we're there, because we've come a long way. Stocks have come a long way on basically, in inverted commas, Fed liquidity, but I mean that's not necessarily what's actually done it. I mean there's it's more of like a confidence thing. Stocks go up. Any asset goes up because there's more buyers than sellers. So there's more buyers than sellers, and the Fed isn't buying stock prices. There's market participants buying. Sorry, the Fed isn't buying equities, but there's market participants buying equities. So those people are driven by whatever in their mind is telling them to buy. So once that dissipates, if that dissipates, then that's the rally over, and that's, do you know what I mean? They're all going to start selling then. But yeah, that's sort of what I'm thinking for the overall stock markets, and that clearly it's not good for Bitcoin. It's as bad for Bitcoin as it is for bond prices, as it is for gold, silver prices, as it is for stock market. It's just bad for everything basically. It is much the same as what happened here. It was here. This is the Bitcoin price, but this is March. This is when basically everything collapsed. This is it basically. So yeah, anyway, so yeah, we've got that fun to look forward to, haven't we? So excellent. So yeah, that, as I guess, is my biggest bearish case, but that is fundamentals, and you guys know how I don't particularly like trading fundamentals, but obviously I'm not trading based on that. But if the market starts to turn and we start to take out these support levels, then we obviously flip to the sell side, and then obviously with that will be the first signal. I mean, Bitcoin isn't going to get down to here before it's got to here. Do you know what I mean? It has to get to here first, and then it has to get to here first, and it has to get to here. So there'll be plenty of times to evaluate what we do in our strategy, and evaluate my current bullish thesis based on price action. So anyway, so I've rambled on a little bit there. Obviously it was Fed day, so there's a lot of Fed stuff to talk about. But yeah, so yeah, thanks for listening, guys. Remember, this is not a financial advice. I'm not a financial advisor. Always do your own research, and I'll speak to you guys soon.